Hey guys, welcome back to another Sunday video, prepping for the week ahead. We're going to be taking a look at, in this video, indices, commodities, crypto, and currencies as well, as we had a bit of an interesting week last week, and I also want to prep for the week to come. So starting out with indices, we did get a pretty interesting push here through the all-time high. And one thing that I noticed here when looking at the price action for the S&P 500 specifically is you've had a win streak above the all-time high. To me, this shows a lot of strength considering, sometimes you get a test of the all-time high that kind of fails out and then pushes lower. But in this case, we've actually had a very steady breakout and what seems to be a lot of confidence from the bulls when it comes to the S&P 500. So for me personally, on a price action basis, this looks very, very bullish. You've got higher lows, you've got higher highs, you've got confidence above the all-time high with very little, volatility upon breaking out of that all-time high. To me, this suggests that indices, from a price action perspective, look very strong. If we take a look at some other readings here as well, if you take a look, for example, at the NASDAQ put to call ratio, we still see crowd sentiment is pretty pessimistic on the NASDAQ. However, we did get some interesting shift in indices, sort of bias here in the latest investor sentiment survey that came out. You can actually see for the first time in a while there were more bulls than bears in the weekly reported investor sentiment survey. So to me, this shows that the sentiment in the markets is now gradually shifting back in favor of people or the crowd being more bullish. We saw peak pessimism, earlier this year, which has now turned into what seems to be a little bit of optimism and euphoria in markets. So my perspective on indices is, while I'm not adding a bunch of size to my existing positions, I have quite a few stocks that we bought over in the market sell-off, as well as a trade on the Russell that I'm still long as we speak. So I've actually gotten the chance to trail this stop loss, three different times. I trimmed my initial stop loss, then I trailed my stop here to around 2006 or 2060 on the Russell. Then I trailed my stop loss up to 21.26, and then now up to where it currently sits around 21.55. So Russell has been performing really well, nice momentum, and again, very clear higher highs and higher lows on this chart. So I'm remaining in the trade, and this has been so far, the biggest winner that I've had in my account this year is long the Russell. So I'm going to stick with that trade. I'm also long the German DAX, which almost stopped out for me, but I've stayed in the trade here and now been able to, or now looking like we may actually get the chance, if we can break through these highs, to trail a stop loss into profit, which would be great. So I'm continuing to manage that trade. Take a look at the VIX here. VIX is down to 16.37. However, you did get a bump up in the VIX towards the end of the week. And now, this kind of signaling that volatility in markets has greatly diminished, right? We went from a very highly uncertain market to what seems to be a pretty complacent market now. If we take a look at the dollar index breaking through these lows here, and still looks like it is in a persistent downtrend. I think the market is sniffing out the idea that the Fed is likely to cut interest rates potentially up to 3 times this year. And early in the year, the idea was we might get 1 rate cut, and now we're starting to see 3. And I just want to say, the reason that I have been long the Russell is because for some time I've been more in the camp of thinking that the Fed is likely to cut rates 3 times this year. I've said that a couple times on the streams and videos. It is also why I'm long gold. I think rate cuts could benefit gold as well. And also gold offers a little bit of a geopolitical hedge in my portfolio. Also, just a real quick plug, we are currently doing a 40% off Edge Finder sale this week right now. It is our biggest discount that we do all year long, is the 40% off discount. And it is linked in the description down below. There's a promo code. Actually, I'll write that out for you. It's promo code YTVIP for 40% off. Link below. So check that out down below in the description if you're interested in getting access to the Edge Finder before that sale ends. It is the biggest discount we're doing all year for the Edge Finder summer sale. So take advantage. If you haven't already picked up a copy, there's your chance to do so. A really great discount price. And by the way, it is a one-time price to get access to all of our tools and software for just like I said, it's a one-time price. So check it out down below in the description. Let's take a look quickly at the top setups page here before we come back to gold. So if we take a look at the top setups page, what you can see here, is I can filter out, just remove the neutrals, and we can see what we're working with here. So overall, we have a pretty busy watch list. We have the S&P 500 getting a bullish reading, the DAX, which I'm already long, Euro dollar, NASDAQ, Euro CAD, Swiss yen, Chinese stocks, the Nikkei, Euro Aussie, Euro pound, um, NZD USD, the Dow Jones, Kiwi yen, Kiwi CAD, Euro yen. And then on the bearish side, we have dollar ZAR, CAD Swiss, dollar yen, Aussie Swiss, pound New Zealand, and dollar Swiss. So good little watch list here. Definitely going to keep me busy here in terms of potential setups. You'll notice that gold is no longer a top setup on the edge finder. I think part of the reason for that is that the put to call ratio, which is factored into the score for gold, has flipped a little bit for gold. In fact, let me check. If I go to put to call and then we select for gold quickly here, you can see now it's back in kind of neutral territory. So not a strong reading either direction in terms of crowd sentiment on gold right now in the put to call ratio. But again, back to my thoughts on gold, I do think that gold offers a bit of a geopolitical hedge to everything going on, just in case you have something flare up. But I also like the rate cut story and what seems to be a cooling economy in the US. Now, I don't think that the US economy is crashing, but I do think that the US economy is cooling. We've gone from a really hot environment to what is a normalizing US economy. And I think that that leads to rate cuts. And any uncertainty in the jobs market, et cetera, I think could send gold higher. So I like the idea of looking for higher highs in 2025, and I am positioned for that in my account. Take a look at silver here as well. Silver looks really strong. Looks like it wants to push back to that 37.25 level. Oil also took a dive yesterday or on Friday. And what we can see here is it really topped out on the geopolitical uncertainty of what was happening in the Middle East when the US got involved with Iran. And then, of course, since then, it has pretty much diminished as there was not a big response from Iran or any further escalation on that front. And I think that this helps with the inflation story. I've talked about this a lot. Inflation is really under control at this point in the US, which has been a great and welcomed thing by the Federal Reserve. And which is part of the reason why I think we should get rate cuts this year. So oil prices down. I don't have a strong bias on these on oil at this time. Let me just double check that that is the case. But I believe some softening in the economic data has made me a little bit less interested in being long oil. However, the jobs data that we got on Friday, if we can just recap that for a second, in case you didn't see it. Let's see if it's in our U.S. economic heat map. If we pull this up here, what we can see is that you do have some interesting stuff that took place last week. NFP came in better than expected, which was a big win for the Fed and for the economy in general. We had a strong jobs print there. ADP was soft, but then you had job openings that were strong. Jobless claims were strong. Unemployment rate ticked lower to 4.1%. I mean, these are dollar bullish components and stock market bullish components, right? The stock market wants to see a strong jobs labor point, but also or strong jobs numbers, but also cooling inflation. And I think that that's kind of what we're getting at this time. So it's definitely not perfect in terms of the state of the economy, but it seems to be cooling, but inflation seems to be cooling as well, which is a good sign. And so I think that stocks can continue to go higher. And I'm not outright bearish the dollar as much as I was perhaps 2 weeks ago. We've seen that labor data report on Friday, on Thursday, the jobs print was very, very strong. So I do think that that is what bolstered the dollar a little bit, or at least stopped the bleeding from this downtrend that we've been in. But I do think that if you're going to get a persistent uptrend in the dollar, you need to see something like a hotter CPI print or something that's going to really push back the idea that the Fed is going to cut rates. Because I think right now the dollar index will continue to move lower as long as the market thinks, hey, that Fed's going to cut rates. That's why euro dollar continues to kind of grind higher up despite the strong jobs print. Same with pound dollar. I'm a buyer on pullbacks of these things. Same thing with dollar yen. Well, not so much with dollar yen. It's been choppy, kind of sideways here. Dollar Swiss looks very much like the dollar index. Dollar CAD, I'd be interested in selling on a rally. The Aussie dollar pulling back into what was resistance could turn support here this week. Kiwi dollar, same story. Take a look at some of the yen pairs here. Very strong. Euro yen, pound yen looks pretty strong too. In fact, I'm not sure if this is still on the Edgefinder's top setups page, but let's just pull it up and see what we've got for some of the yen pairs. Swiss yen, Kiwi yen, and Euro yen are all getting bullish readings. So pullbacks on those would probably be of interest to me. If I take specifically a look at Kiwi yen, this was one that I'm interested in getting back into. I took a trade that made some nice profit. I think I closed like 110 pips or so on this pair. So I would be interested in buying back into Kiwi yen if I get a pullback. I do have positions on the short side of Euro pound. I actually did just add a third short to my trade at this kind of towards the top of this candle. So we'll see if we can get a push lower. I'll take profits on my basket of trades here, but if it keeps going higher, I do have interest in adding another trade if we can get back up to this 87.33 level. These are very tiny trades. I'm stacking some shorts on Euro pound at this time. And so we'll see how that goes. I'm also long CAD Swiss. This one's another one that I'm in drawdown on, but very small drawdown overall, and looking to see if we can scale out of this trade as well. Have not added another long trade, but still managing the existing position there. Let's take a look here just also at some more stuff. So, of course, COT data, if you're wondering about that, it will be delayed by a day due to the U.S. federal holiday, 4th of July, that happened on Friday. So that will be delayed by one day, or actually might be 2 days. I'm not exactly sure. You can look it up on the internet if you'd like. Let's see. The Bitcoin to gold ratio, always worth keeping an eye on. Bitcoin's been stronger than gold recently, suggesting a bit of a more risk-on type environment. If we take a look at retail sentiment, take a look at some crowd positioning, you've got a lot of bullishness from the crowd on things like platinum, iron ore, Russell, dollar Swiss, Dow Jones, copper, DAX, and then I really like to use this one specifically for currencies. So let's just look at currencies for just a second. So here's a look at the major currencies and crowd sentiment on each one. Again, if you have the Edge Finder, just click this market sentiment under retail sentiment tab. Euro dollar, pound dollar, these ones are getting strong kind of bearish market sentiment, giving us a bullish bias, right, on those pairs. And then dollar Swiss franc, you're getting a very high level of bullishness from the crowd, and then a small amount of bearishness, the contrarian signal being then a bearish one. So I love this chart here for that exact reason, just kind of keeping an eye on especially currencies. Retail sentiment is very interesting for currency trading if you are interested in that stuff. Another one that I've seen some questions about here recently has actually been the carry trade scanner. People wondering about swap payments. Had a long chain of questions about this in a recent video. Somebody asking about, how can I be on the right side of carry trade or where my swaps aren't so costly? Use the carry trade scanner. If you have the Edge Finder, just go to your carry trade scanner, and if you trade in the direction of the interest rate divergence, right? So if you're long dollar Swiss, if you're long pound Swiss, you're going to get paid to hold those positions, whereas it's going to be very costly to short these positions. The carry trade scanner is a really interesting one for currency traders, so explore that if you do have a copy of the Edge Finder. And if you don't, remember that 40% off discount is only available for a very short time, and it is the biggest discount that we do all year long. Thank you guys very much for tuning in to this week's video. I hope it was helpful to you, and we'll see you next time.